Back to work. Another day in the rearview mirror. Hope you guys had a fantastic Thursday trading session. But it's about that time of day again here. Time to get back to work. Friday is right around the corner. It's Thursday evening. It's March 25th, 2021. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it is so great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. Not just any Friday, but the last Friday of the month of March. I got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the S&P, we get the Nasdaq, and we get the gold on our radar for tomorrow. Boys, speaking of tomorrow, lots of opportunities we're tracking for tomorrow. But here's the big question. Just last night, on last night's newsletter, we talked about where to get in short. But now here we are. Everything now is looking pretty bullish. S&P rising higher, Nasdaq pushing off the lows, gold in a great place to rip back up into that trading range. So here's a big question. Can the buyers complete this pendulum swing? Can they complete this full rotation? S&P's back to that range where we began this week. Nasdaq poised for a nice big rotation higher, and gold right underneath this range. Can the buyers keep it together? Can the buyers rip this thing higher on Friday and finish this week in the green? I'm going to cover all the details and talk my favorite setups to capitalize on hopefully some nice moves on Friday's trading session. Before we jump in though and get this video started, I just want to make sure to remind you to subscribe to our YouTube channel. We publish this video newsletter every evening with our best trade ideas for the following day. So make sure you subscribe to our YouTube channel. And don't forget, if you have any questions, drop those questions for me in the comment section below. I'd love to answer any questions you might have. And as always, if you enjoyed this video tonight, do me a big favor, hit that like button, that thumbs up button. It really goes a long way to help me grow this YouTube channel. So please make sure you subscribe, drop those questions if you got them, and thumbs up if you enjoy the content here tonight on this YouTube channel. But enough of the introduction. Friday is only a couple hours away. I want to make sure you guys are ready to capitalize on no matter what we get in the markets on Friday morning. Now, as I mentioned earlier, the big question I have is can these buyers finish this rotation? Buyers coming in control. Buyers coming in control. Bears having the goal, but what a beautiful spot to get that rip going higher here. I'll tell you, a lot of bullish opportunities we're tracking as we go into Friday, right? We're bullish on the S&P, rotating bullish on the Nasdaq, and a beautiful spot to buy that low here on the gold. So where's the best place to get in on the pullbacks? Where's the best place to get in on the break higher? And what if this all falls apart? What if the market turns bearish? Or what if the bears break that low on the gold? Not to worry. I'm going to make sure we cover all those details so you are ready for Friday's trading session. Now, before we jump into these charts, though, let's make sure we take a look at the calendar for tomorrow. Tomorrow's Friday, March the 26th. Now, of course, tomorrow's a Friday, so Fridays are always early in, early out. You got to have a good reason to be trading after 11 o'clock on a Friday morning. What I always do is I always set my alarm clock on a Friday morning for 10:45 a.m. And that's my kind of my personality check at 10:45. Usually on a Friday morning, 10:45, 10:50, that's when you're going to start seeing the personality start to fade, the ATR starts to rise, liquidity starts to drop, and the gamblers come into the market. My best advice to all my clients and you as well on a Friday morning, get there early, get your money, and get the heck out of there early because not a lot of good stuff happens after 11 o'clock on a Friday. We are not our sharpest, right? The markets are not the most consistent. There's a lot of rookies and inexperienced traders who don't know any better, and there's a lot of sharks that enter the market on Friday afternoon. So careful on Fridays, early in, early out. Set your alarm clock for 10:45 Eastern time and be very careful. You've got to have a good reason to be trading after that 11 o'clock hour. Now, you'll notice there will be some movement in the afternoon, right? 12:30 to 3:45, 4 o'clock. But just remember, though, volatility and ATR and liquidity will not be at its best on a Friday afternoon. So if you do choose to trade Friday afternoons, be careful. Cut those position sizes down. Keep that risk small. Save those bullets because next week is the final week of the month. And that's where the big opportunities are always coming in. So don't force it tomorrow afternoon, early in, early out. Save those bullets for next week as we go into the end of month volatility. That will be the better time to be trading. Now, as we look at the schedule for tomorrow, again, all of our setups are weighted towards the beginning of the trading session. We open up our trade room at 8 o'clock every morning, so we'll really focus on that 8 o'clock to 10:45 block tomorrow. And we've got some big news coming to the pipeline here tomorrow at 8:30 Eastern Time. We got international trade and personal income. The personal income number is one of the biggest, most highly anticipated news reports of the entire week. And that's saying a lot because we had Powell on Monday, Powell on Tuesday, Powell on Wednesday, GDP today, right? Everyone's thinking about inflation. Everyone's talking about inflation and rates, and that personal income number is going to be on every serious trader's radar tomorrow morning. So again, set the alarm early. Don't hit the snooze button. Get to that desk early. You got big news at 8:30 Eastern Time. And as I've said a couple times already this week, some of the best setups have come from 10 o'clock to 11 o'clock, right? So we get some big news tomorrow at 8:30. Hopefully we can get a couple setups before the New York Stock Exchange at 9:30, and then 9:45 to 10:45. You definitely want to be with us in the trade room or at your desk trading on your own tomorrow morning. So that's the key for tomorrow. Early in, early out. Don't hit that snooze button, but keep those lunch plans, right? Keep those lunch plans because hopefully we'll get in, get our money, and get the heck out of there before lunchtime settles in. And don't forget, guys, 8 o'clock Eastern Time tomorrow morning. I would love to have you there, right there with us. We'll be hunting for these trades together tomorrow morning with all the members of our trade room. Let's get into our charts here now. Got the S&P, we get the Nasdaq, and we get the gold on our radar for tomorrow. S&P, Nasdaq, gold, all three of them look really ripe for buy setups, right? S&P's ripping higher, Nasdaq's rotating higher, and gold's sitting right at the low of a trading range. Let's jump first here into the S&P 500. And let's take a look at what happened today, where we are in the big picture, and kind of what the overall plan is here for tomorrow. Now, one of the most important things is let's take a look at the slightly bigger picture here because you'll notice that range overhead, right? This 39.15 range here. That is a big deal. In fact, if you recall from earlier on this week, right? The market really has one big range, kind of acting as a magnet. If you were to kind of combine these two ranges together, right? A lot of overlapping candlesticks in this area. So there is a big magnet right back into that, 39.25, 39.30 area with the big target tomorrow of that 39.44 half. That is not the all-time highs, right? The all-time highs are a little bit higher up the ladder here. So probably not all-time highs, maybe tomorrow, right? Maybe, but probably more likely next week here. I'll tell you though, this market on the S&P, looking at some slower time frames, it is really poised for quite a strong rally here over the next couple trading days. So we can definitely tell there's a lot of reasons why this market may keep going here. We're definitely bullish on this on the S&P right now. The day began pretty much. We had that short off the high of that channel we talked about in last night's newsletter. They completed their measured move, went into a trading range, and of course, ranges are magnets. Ranges love to swing, right? Price goes below the range and swings now right back up in the opposite direction. A classic pendulum swing or momentum swing when markets try to get below a trading range and end up coming right back up again. So now we've got a pretty much simple, a 1, 2, 3 move for the buyers. The buyers have control right now. We've got this range acting as a magnet. Big old targets up overhead. As I mentioned earlier, got a pretty good idea of where this market is headed. We also have a pretty good idea here for how to trade this for tomorrow. Now, of course, in a bull market like this, my job is to buy at support levels. So if I had it my way tomorrow, I get a nice deep pullback down around the low of this channel, get underneath the moving average, and look for a combination setup. Look for a failure into pullback combination. One of my favorite setups every morning in our trade room is a 2-try failure pattern. But again, keep in mind, those failures oftentimes will snap back up, pull right back to the moving average for that failure into pullback combination. Now, you'll also see, too, there's a range down here. And that range, in all honesty, that could be I've got it marked up as my buy zone right now, but that is also a magnet, right? Ranges are magnets. So we may end up getting a deeper pullback. Now, if we get a deeper pullback into that trading range, that would honestly be pretty darn good because it would give us a nice risk-reward ratio on this trade. But if we see a real deep pullback and we go into that trading range, what's my concern? My concern is that range will act as a magnet. Great spot to buy a deep pullback, but again, that range is going to be a little bit tricky. So to avoid the trap of trying to buy inside that range, now we look for this. We look for what we call a nested failure. We want to anticipate bears will try to go back into that range from earlier this morning, anticipate some chop and slop, and look for the bears trying twice. Once, twice. Once we get those bears trying twice, now we know exactly where their stops are. Right? They're right above that prior swing. Now, what happens a lot of times is once we get that, what we call a nested failure, and we can buy into those stop losses, we oftentimes get a nice hidden channel and that pullback off the low of that hidden channel. So think about that setup if we pull back a little bit deeper tomorrow, right? Into that range. And again, the concern is that when I pull back a little bit deeper, if I get underneath this channel, momentum for the bears starts to kick in. This range down here starts to kick in as a magnet. And so I want to give the sellers kind of the benefit of the doubt. I'm also trying to avoid what I would anticipate be a little bit of choppiness around that range here. So a nested failure pattern into a pullback combination, right? So be aware of that. Also, too, every once in a while what will happen is the market will rip off of that low, right? When you trap in all those sellers and those bears get stopped out, right? And you're buying those stop losses, keep an eye on a trap. Traps are really common after these really deep pullbacks that fail. And of course, we can get that trap entry going there as well. So we get a failure into a trap entry, right? And again, added bonus points, combining a channel there as well. So I think some really easy setups there, failure into pullback combinations on this pullback. And again, the deeper the pullback, the more we want to use that nested variation. Now, nested variations, we're gonna cover a lot in this video here tonight, but I want to give you a deeper dive into all these entry patterns. I can't cover all the small details of this, but if you want more information on these failures, pullbacks, trap combinations, what I'll do is I'll put a link here for our free trading course. If you want a deeper dive, you want to learn all the rules and how we actually trigger these entries, make sure you grab that free course linked up in the upper right hand corner. That way, the next time I say deep pullback into nested failure, into hidden channel pullback, right? You'll know exactly what I'm talking about. One of my favorite ways to trade pullbacks in a trending market. So again, you'll see more examples of these setups off real charts, and you'll see real examples of these patterns in that free trading course. So grab that link linked up in the upper right-hand corner and join that free course to learn more. Now, you're probably wondering right now, okay, if we get that deep pullback, at what point does this market turn bearish, right? And it's a good question, right? So at what point do we start to sell this market? Well, first of all, we have to get underneath that channel. The second thing is the sellers have to show us proof. And the proof will be holding that pullback and jumping off the moving average. Okay, now we call these 1, 2, 3 reversals, right? 1, 2 reversal. You can see a very good example right here, right? 1, 2, 3 reversal. Now, whenever I see a 1, 2, 3, that gives control now to the bears, right? I'm not trying to sell the first pullback. That's a rookie mistake. I will sell the first test, though, of that new channel, right? This is going to be an easy short off of that high. The hardest part about that trade is simply waiting for that 1, 2, 3 reversal. Again, like we saw earlier, break down, we go 1, 2, 3 reversal up, we mark the highs, we mark those lows, right? And we're buying the pullback off the low of that channel. Very simple there. Strong move down, pull back to the moving average holds, strong jump off. Remember, the most important part of the reversal is not the pullback, it is the jump off the moving average. 1, 2, 3, mark that low, mark that high, first test is always the best test off the high of that channel. And also to keep in mind, right, we're not just blindly selling the top of that channel, right? We're looking for things like failure patterns, pullback combinations, strength moves, and traps, right, as we go. Just like back here, right? Find that channel, get that failure pattern off that low, right? And again, you can learn more details of these specific entry setups in that free course I mentioned, linked up in the upper right-hand corner. Another thing you want to think about too is if we do end up reversing, but we get stuck inside this trading range, right? So imagine for a second now the market goes back into that trading range now and we start going sideways here. That is a very viable option tomorrow. If that does happen, our job at that point is going to be to find areas of resistance above the range. Ranges act like magnets, and if we do end up going back into that range from earlier today, or if we end up making a range at any point tomorrow, remember, wait for the range to develop, find levels of support and resistance. In this case, we're a bear market. Find levels of resistance above the range and combine those levels of resistance, what we call two-try failure patterns, right? Wait for price to break out, wait for buyers to buy that pullback, and literally use their stop losses as gasoline to drag that market back down into that trading range. The bears, of course, have control at that point. The range acts as a magnet, right? I pity the buyer trying to buy that pullback because everyone's going to be targeting that failure back down into that trading range. Bears would love to get back down to retest those lows. They will have some trouble, though, with that trading range, most likely. That is likely going to be a magnet here if the bears can take control. Now, as the market goes higher, we know we have this range up overhead. At any point, though, this market could end up going sideways here. It could be here, it could be at higher up, it could be up around that measured move. But if we start going sideways in a bull market, what do, right? What's the plan if the market goes sideways, right, in a bullish momentum environment? We find levels of support below the range, right? Just before, find support levels below the range, wait for that pullback, right? It almost always does, right? And nothing's ever guaranteed, right? But it'll almost always pull back. If it starts going sideways there, that means buyers are no longer interested in buying high. Eventually, they'll run out of bullets. The market will pull back. And when it does, you have your great shot here to catch those bears trying to get short, right? And buy right into those stop losses for that rally higher, right? You can see a great example of these failure patterns below a range right here, right? It's a great example right there, right? There's your trading range. The market breaks underneath the range. The bears come over. They try to get short, and you know what happens, right? Those bears fail, and the market rips higher here. Keep your eyes open for that if we go sideways as we go higher here, or if we just simply go sideways around this weekend gap, for example. Now, if we keep going higher, couple things you want to keep in mind. We have this overhead resistance overhead, right? So very important we think about where this market's trying to go. Yes, the range is a big magnet, but there's one thing on the mind of the buyers right now, and that is how can I get back to that 39.44 half, right? That major top up overhead. So we know there's a range overhead, but let's talk about what happens if this market keeps on grinding or if it really pokes its way higher. The first thing is if the market starts to grind higher, right? If we start to grind higher here, this becomes a spike in channel. Spike in channel patterns are notorious for deep pullbacks near the base of that channel, along with failure into pullback combinations. So that sounds like a broken record here. Not a lot changes if the market grinds higher, right? Grinds higher, not slams higher, but if we do see the market grind higher here, again, think about that seller failure pattern into pullback combination, right, for that next leg going up. And you could easily think how that's one leg, that's two leg, and that could be third leg, right? So use that, right? Use that measured leg to project that target up from there. That'd be a great buy setup for us if this market keeps on grinding. But what if we just jump, right? What if we jump going higher here? 2 patterns to watch if we do end up jumping higher. Now, one would be a 1, 2, 3 move. If this thing opens up in Asia and starts ripping higher here, you can mark up that high, you can mark up that low, and grab that first test off the low of this channel. And again, remember, we're not just blindly buying it, right? Looking for seller failures, pullback combinations, looking for strength moves, looking for bear traps off the low of that channel. Again, I'm not going to go over all the details of each of these individuals' entry triggers, but I will go over all those details in our free trading course. Grab that button linked up in the upper right-hand corner. Grab that free course, learn the setups, and trade right along with us every day in the trade room. So we know we've got, right, that potential 1, 2, 3 breakout. Another thing I'm watching as we go higher is if we get a 2-try trap. Let's say, for example, the market really rips higher here. Strong run up. We know where the market wants to go. We don't want to chase it. So I'll look for a 2-try trap pattern. Strong move up, shallow pullback, higher high in price. Remember, say it with me here. Strong move up, shallow pullback, higher high in price. Traps, baby, right? That's a great setup as we go higher, right? Again, strong move up, shallow pullback. The shallow pullback is what kind of whets the appetite, right, of those buyers. A lot of folks will not get in on that shallow pullback. That higher high in price confirms the move, and the traps are waiting to go. Targets, again, are up around those highs. And then remember, once we get up around, if we get up around these highs tomorrow, again, we may get chopped up a bit into this range right now. But if we do get up into those highs here for tomorrow, can I sell those highs? Yes, I can. Major turning point, right? I'm not going to step in front of a freight train, but if we can run, right, if we can get up into this area here, take out these highs early in tomorrow's session, we can now start looking for what is a crown reversal pattern. So if we do take out those highs, right, tomorrow morning at some point relatively early in the day, we can now look for a reversal, right? Use that range as a magnet. Now, the hard part is we got a lot of bullish momentum at this point, so I got to be careful. Got to give the buyers the benefit of the doubt. Let them try once, pull it back, try twice, get that trap, and there's my short going back down again. These are called, again, crown reversal patterns. They're very simple patterns, right? They understand that the buyers have control, so you want to give them the benefit of the doubt. But, again, we're right at a major turning point, so it's definitely worth our time to consider a short. It's just we have to let the buyers kind of wrap that proverbial rope around their neck a few times, right? And then, of course, hit them either on the trap, right? Or if you don't feel confident in the trap, hit them right underneath their stop losses. That trap will always be the best entry, though, because you're basically selling right where the buyers don't dare to go, right? The buyers will buy low. They'll buy low. They're not going to buy into those highs. So it's an easy way to almost like find some cover, right? To sell short in a bull market. Does that make sense? Hit that thumbs up button for me if it does. If it doesn't, right, give me a thumbs down. Let me know if you guys want me to clarify more of that in the future. So crown reversal as we go, right? Crown reversal as we go back down here into that trading range. Definitely some food for thought here on the S&P for tomorrow. Now, we're probably going to see some ranges right in the middle here, right? So keep your eyes open on those ranges, right? Into those pullbacks, those failures, and that blast right back up, all right? Don't force the breakouts, fade the breakouts. We're looking good here for the S&P for tomorrow. Let's keep going, right? S&P, relatively straightforward. The Nasdaq here. Nasdaq looks really, really good here for a nice move higher. As you can see, the Nasdaq right now, we're kind of range bound right now on this Nasdaq. If I look left here, if you recall, there's that range from, it wasn't this week, it was late last week. We've been talking about this range as a magnet pretty much all week this week. The bears obviously got their move lower, back down into that range, right? We talked about that hidden channel and the strength, right? And that failure. We talked about that last night on the newsletter. So hopefully you were ready to go on that here today. So when I look at this chart, I pretty much think of it like this. It's a bear market that ran up, comes back into that range now. We've gone below the range, and now we are 1, 2, 3, right? Now we're rotating back in the opposite direction, right? The bears have failed, at least for now, to hold that move below the trading range. And there's going to be a big bullseye right now on the pendulum swing back in the direction on those highs up here. I mean, there's a big carrot at the end of the bull stick right now, right? Trying to lure these guys up around those highs here. And so we anticipate now that pendulum swing. And again, I know it's pretty extreme here, but there is a very easy case to make. We can easily make that pendulum swing tomorrow and then potentially again back up around those big highs. Now that's a pretty big pill to swallow, right? It's a pretty big bite to chew off tomorrow up around that 13,150, but this is how ranges work, right? If we fail below that range, this market has potential now to really whip and go higher. At the same time here, the bears, of course, have a lot of momentum coming down. They'll try to force this thing down, break through these lows, and we've got that 1700. No, not 17. Sorry, wrong market there. That 12,970. Look at that big open space down there. So there's plenty of space for the bears to run if they can break through, and a ton of potential here for the bulls. So like I mentioned earlier, right, can the buyers finish this rotation? Can they finish this move and run these bears out of this market? The amount below the range is the amount above the range, and that is where I would have my objectives, possibly up to that 13,000 here for tomorrow. So I want to be a buyer on this. I really don't want to get short on this. I will say though, there's not a lot of bull momentum yet. You'll notice we've got that move lower. The bears have pretty much all the momentum. We really don't quite have that reversal yet, right? So if somebody asked me kind of what's the temperature of this Nasdaq right now, I would say it's probably lukewarm, right? Not cold, probably lukewarm. It's a little bit on the bull side. Still got those bears though, you can definitely tell, because we haven't exploded off the moving average yet, right? You'll know when the bulls take it. The bulls will go 1, 2, go, right? The bulls will go 1, 2, go. So we definitely have anticipation of these bulls right now, but again, probably a little bit of bears still hanging on by a thread here right now. So how do we trade this? I want to be a buyer. I want to buy at a support level. And so I want to buy the low of this channel. I love this rising support trend line. That'd be a great spot to be a buyer. I've got this little spike in channel here. And so that is some food for thought there. We'll talk about that in a second. And if the market rallies higher, I'll have to act quickly, but we've got a great shot here to buy it as it rallies back up to that pendulum swing. So think of it this way. If we pull back, I really like this channel a lot. I like that channel a lot. I'd love to get a pullback to low of that channel. If I had it my way tomorrow, they would run this thing back down to those lows of the channel, get that moving average coming over, and we'll be able to rope in those bears, right? Let those bears try to get short off the moving average. Okay, they apparently are not paying attention because it's rising support there. The range above us acts as a magnet. Once we see bears commit, now we know where their stops are, and we can simply buy right into the stop losses using one of those 2-try failure patterns. Now, I've also got this spike in channel on here. Now, spike in channels, as I mentioned before, are notorious for pullbacks into the base of that channel. So here's a situation where we don't want to trade inside the range. So we talked about this a lot last night on the newsletter. If I want to buy a relatively shallow pullback, I'm going to have to look for a trap entry, right? Now, traps come in all shapes and sizes. But what you want to think about is as we pull back here, if we pull back and then all of a sudden, right, we see bears come in, try to get short once, we go back into the range now again. There's obviously buyers holding this thing up. That's when get that trap, right? And that trap will be your best way to buy underneath the range, right? That's one of the goals of that trap. That's why I'm looking for a failure pattern right here, right? I wouldn't look for a failure right here because those types of entry setups inside the range, they oftentimes will fail. They'll go up, crash back down, and then go without you. So try to stay away from those setups into the range here. If you get a shallow pullback, though, and we don't get down to the low of that channel, bears try to get short, we go higher. Once we go back into that range, now you know what's going on, right? Now you know the buyers are a little stronger than we thought they were, and now he's going to find a way in, right? If it gives us a beautiful little trap there, we'll grab that with confidence. So a shallow pullback trap or a deeper pullback failure pattern off of that low. Probably not going to have enough to thread the needle for a failure pullback combination, right? Failure pullback combination. The pullback will be the one that'll be difficult to get into because you'll be right into that trading range. But those are some ideas there on the pullback. If the market runs higher, this is where a 1, 2, 3 breakout comes in handy. Remember, strong run higher, mark that high, mark that low. First test is the best test off the low of that channel. Remember, we're not just blindly buying the low. I'm looking for seller failure patterns, pullback combinations. I'm looking for strength trades come off the low, looking for traps, right? And again, I cover all the smaller details of these specific entry techniques in that free course I mentioned linked up in the upper right-hand corner. Or we see it really rip, shallow pullback, higher high, and trap low, right? Say it with me here. Strong move up, shallow pullback, higher high, traps, baby. Strong move up, shallow pullback, higher high, traps, baby, right? Traps are because we don't want to buy into these highs. We want to buy at support. And don't forget, added bonus, if you add a channel on here and combine that channel. Boy, I love those setups, right? 2 try trap, 2 try breakout pattern. We see a lot of those every week across all of these markets. So some setups to look for as this market runs higher here. And then what do you think? Can I sell it as it goes higher? Well, what do you think, right? If I sell up here, remember we talked about this last night, right? It's location and momentum, right? Remember that from last night? I know last night's video was a little bit long. I apologize about that, but I know you guys want to learn as much of this stuff as you can. So when I get up into this area here, how is my location? Location is primo, right? Great location to sell back down into that trading range. But here's the problem, momentum. Yeah, momentum's not very good. Not to sell short. Right? Momentum's great to be a buyer on this, right? But not to sell short. So if I want to sell up in my sell zone, right? If I want to sell up around there, let's say, for example, we run all the way up, right? The bulls get their shot, right? We get that pullback. We finish off that move here. The market, right? The market sits. How do I short that thing now, right? That's the question. I want to short it with a nested failure. What I look for is a crown reversal because this thing will be very bullish at that point. And in all reality, it's not a major turning point like the S&P had. It's a pendulum swing, which is great, right? It's a great spot to look, but it's not bulletproof, right? So if we do end up again all the way up, then what do? We give the buyers the benefit of the doubt. We let them try once. No, we do not short that, right? That's a recipe for disaster right there. They will come right in and hit that again here. Let them try a second time, and then once they try that second time, now you got them, right? Now you've got them right where you want them. The buyers, of course, now are fully committed. They're buying into extremes up around this pendulum swing. Again, my ideal entry is that trap above the high. The secondary entry is to sell into those stop losses. And keep this in mind as well. We oftentimes will see this thing turn over, draw that channel off that high, and hit it again. At that point now, there won't be as much concern about momentum now. It's a crown reversal or a nested failure pattern, right? Into a 1, 2, 3 reversal, into a hidden channel pullback, right? See how these components all work together over and over again? It's not rocket science. It really isn't. Once you learn it, it becomes pretty much second nature. And again, we'll be teaching it and trading it together tomorrow morning in our trade room. If you're serious about your trading career, the trade room tomorrow morning, 8 o'clock Eastern time, is the place to be. We'll look for this stuff together here. So that's the way I want to sell off of these highs here, right? Respecting those bears' momentum or the bull momentum. And then how about going lower? As the market goes lower here, what would be what's a plan as we go lower? Well, first of all, we have a lot of bear momentum, and for the most part, the buyers really haven't taken that much control of this market. There's a lot of potential for them, but a bull market would be a 1-2 go, a 1-2 go. We just don't have that go yet. So the bears do have a little bit of the edge. Again, we're lukewarm right now, right? A little bit on the buy side here. Now, if we collapse back down to that low again, what are my options right now? Okay, this is when I like to use kind of like a bump and run play, which kind of reminds me of American football, right? Or handball, as you guys call it in Europe. I always laugh at that stuff. Anyways, so as the market goes lower, if we can take out those lows, I can definitely look for the buy side with a 1 try for the bears, 2 try for the bears, right? Mark up that trend line, look at those stops, and I can buy that failure into pullback combination, right? So that's something I can buy tomorrow. Again, bears try once, bears try twice. We're buying off that trend line. We're buying off that pullback. Again, it's a nested failure into pullback combination, just as we talked about on the S&P. One more thing to keep in mind is that kind of bump and run, right? That push and go. It's almost like American football, how the offensive line will push back the defense to give the quarterback or the offense a chance to pull the ball forward. So imagine now we had a strong run lower, right? That strong run lower is going to give the bears all of the momentum. Now, I don't want to trade a pullback at that low. What I'll do in these situations is I'll look for the pop back up, look for the buyers to come in and fail, and run them out. Okay? The term kind of bump and run, right? We push back the sellers, or the buyers, with that strong run down. I'm not trying to sell into that low. I'm trying to sell once I catch the buyers going long, right? The strength of the move going down, anytime we see a strong move in one direction, we expect another leg. But I'm not going to sell into that low, right? That is foolish. What I'll do is I'll wait for the pop. That will get buyers thinking this thing has reversed, although it hasn't yet, and I can now use their stop losses to fuel this market going lower, right? Call it a bump and run, call it a push and go, whatever you want to call it, right? It creates a momentum move that suggests another leg lower, and then we literally use the stop losses of those buyers to fuel that leg going lower, right? It's a very simple idea. It takes discipline not to try to short that thing when it goes down to those lows. And then keep in mind too, right? If we make that run lower and that pullback does hold with a 1, 2, 3 breakdown, I can now mark that low, mark that high, and we're off to the races to the downside. Again, failure pattern, pullback combination, strength move, trap setup, right? 1, 2, 3 breakdown. Remember, it's not enough for a strong move lower. You have to hold that pullback and go. If the bears can hold it and go, now we know where we're going, right? The next big milestone is all the way down around 12,300 with the big low at 12,200. Plenty of space to run if these bears can really get their hooks in this thing. So now we got a pretty good plan of attack. My only concern for tomorrow is, remember, don't forget, stay out of the middle. If the market does start to go sideways here, just remember, find those levels of support below the range, combine those levels with your failure patterns, right? And use those stop losses as fuel to keep buying underneath that range. Range-bound markets are magnets. Buy low at support, sell high at resistance, focus on failure patterns, and don't forget to check momentum. And again, tomorrow morning, 8 o'clock Eastern time, we'll do it together. That way you know exactly how to execute the strategy correctly the first time around. All right, Nasdaq, you're looking great here. Let's grab some gold for tomorrow. Now, gold, of course, is a little bit fussy here right now, but I'll tell you, these range plays just keep on working here on the gold. So what's happening on the yellow metal, the GC contract here? We're still range bound, right? I've got my range, kind of my weekly range right in the middle. That range acts as a price magnet as always. Now, anytime I have a trading range, I want to find levels of support below the range, like this beautiful triangle, find resistance above the range, like that beautiful triangle, and trade the rotation back and forth as we go. That's why I said earlier, even though gold is very bearish right now, we're at a great location here to look for the long side. And so, of course, I can measure the amount of the move below the range, right? Bring this down, measure the amount below the range, copy and paste that above the range, and all of a sudden now, right, we have ourselves a pretty nice looking target set up, right, for the buyers on the opposite side. So I want to buy low around these lows. I want to sell high around those highs. But one thing I'm concerned about is momentum. We know where the market wants to go, but I have a lot of bearish momentum coming lower here. So again, we talk about, right, location and momentum. It's a great location to buy off the lows, but it's horrible momentum right now. Momentum is not very good here for the bulls. So how would I buy this market safely, of course, without chasing it going higher? Now, I've talked about this entry pattern a few times already. We go down to the lows, the bears come over, they try to get in short once, they try to get in short twice, that little trap low, right, or that trend line low, and we can buy using what we call a nested failure pattern. That is exactly what we're seeing right now. Now, this market, of course, is just opening up in Asia. So what I'd love to do is see if I can get this thing for a trap, right, below that low. So a short little scalp off the low there, that could turn into a very nice rotation back up in the opposite direction, right? A nested failure pattern. And again, because we're overnight, I would be conservative on this and look for that trap entry off the low of that move, right? Bears try once, bears try twice. This could be a trend line test. I would rather get that trap off of that low, though. That would be ideal. And then, as always, as the market goes higher here, if it really races higher now, we can now combine those two highs and then look for that first pullback off the low of that channel, right? So it's a failure pattern, a nested failure into a pullback, right? Failure into pullback combination. Where's my target? Target, of course, again, back up to retest these highs, finish off that pendulum swing, get the top of that triangle. All right, so really nice opportunity here to get this market running higher. Now, keep in mind, too, we've got more support levels down here. So if the market does make another leg lower here, anytime we have a strong move down and they take out those lows, what that does is it kind of scratches the itch for those sellers. It completes the mission for those bears. So don't be surprised if it keeps going lower, takes out these lows, and then we get the same situation, right? Bears come in, they try once, bears try twice, draw that trend line, find that trap, and we can grab those nesteds into pullback combinations, right? So really great stuff there as we go. Okay, so keep your eyes on that. Strong move down into that area of support. Bears have control, but great spot to be a buyer. One try for the bears, two try for the bears. Draw that trend line, use those stop losses. I can buy off the trend line. I can buy into stop losses, and of course into that 1, 2, 3 reversal. 1, 2, 3 reversal, moving average comes over, and first pullback off the low. That is a fantastic setup if we can get lucky enough to get that failure into pullback and run back up into that trading range. Okay, so don't be afraid to buy it using that same nested failure pattern if it does go a little bit lower. Okay, now clearly, if it really rips lower, right, if it pushes lower into those lows and holds that pullback now and jumps, that's called a 1, 2, 3 breakout. Remember though, it's not enough to get a strong move down. You have to hold the pullback. It's not enough to get a strong move up. You got to hold the pullback, right? A strong move higher tells you what? 1, 2, right back down again. Strong move down. 1, 2, right back up again, right? So same thing plays out. Now, if the bears can hold it, 1, 2, 3, Again, strong move down is nice, but can we jump off that moving average? We can. Mark that low, mark that high. First test is the best test. A buyer failure, seller pullback combination, strength move, trap moves coming off the highs of that channel. And this was that 1700 I mentioned earlier, right here with that big round number and some major levels below us here as targets. So easy targets below us if these bears can take control. I would imagine, though, we take out that low and buyers will be jumping all over that with that failure pattern back up into that trading range. Also, too, keep in mind, if we do end up going back into that range and going sideways, this will be a lot of bullish momentum in the market right now. What do? We find levels of support below the range. We combine those support levels with what? With a failure pattern, right? Use those breakout pullback stops as fuel to run this market back higher again. Don't chase it, right? Don't force the trades in the middle. But if it does run up and start going sideways there, stay patient for those buyers to run out of bullets. You'll get that pullback, combine that failure off of those lows. Or let's say, for example, it goes 1 above the moving average, 2 and blast. If I get enough momentum for these bulls coming off that moving average, again, not the same thing as this one, right? It's not the same thing. If it goes 1, 2, go, now we have that reversal momentum now. Mark that high, mark that low. And I know it's scary to buy into that high, but I'll tell you right now, if you get enough momentum with a 1, 2, 3 reversal, you'll be able to get at least the first target hit on that first pullback. So I'm not so concerned about buying into that high as long as I can get that 1, 2, 3. All right. And again, be very careful, right? Because if it just goes straight up, that's not what I'm talking about. Okay. Remember, 1, 2, 3 is it's very, very important because I want to see him hold that moving average to pullback or to pullback to the moving average. It's Thursday after all. Anyways, last thing. If it does run up, right? It does sprint higher. What do? Shallow pullback, higher high, traps, baby. Yep. Remember that? Again, say it with me here one more time, right? Strong move up, shallow pullback, higher high, traps, baby. Again, remember, it's not enough to get a strong move up. It's that shallow pullback and that higher high, okay? This is a strong move up, a shallow pullback, but no higher high there. If it would have made that higher high, I can almost guarantee you there'd be a big fat green candle coming off that low for retest that high there. All right, so great opportunity here to buy it with that, again, two-try trap pattern. And if the buyers really get this thing going, if the buyers really get this thing moving, we've got levels up overhead, 1754, 1757 there as objectives here overhead. All right, guys, remember, buy low at support, sell high at resistance, respect momentum in these range-bound markets. Don't force it. Stay patient and wait for the right entries here. And remember, tomorrow morning, Friday morning, early in, early out, and I'll be right there with you tomorrow in the trade room to make sure we're following the rules, not making mental mistakes, and not giving back the profit we've earned right into the weekend as we go into Friday's trading session. So make sure you come out and join me every morning, 8 o'clock Eastern time in our trade room. Getting registered is really easy. I'll put all the information you guys need to know in the description of this YouTube video. If you're on the blog, it's Sideways Markets right now. I'll put a big button for you guys below this video tonight on the trading blog. So grab that button, get registered for tomorrow morning's trade room, and I'll see you guys at the opening bell tomorrow morning. Don't be afraid to call the office. I'm always here. If you guys have any questions, we've got live chat on the left, live chat on the right, and you can always drop comments in the comment section if you need any help along the way. Guys and gals, thank you so much for tuning in this week. It's been a great week on this video newsletter. I'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, make sure you come back and see us again next week. We'll do it all again for the last week of trading for this third month of the year. I'm excited to see you tomorrow morning at the opening bell. If not, we'll catch you guys next time.